All right, hello and hi everyone. Thank you so much for joining us for our Market Watch episode 35. Okay, episode 35. Hey, okay, where is baby investor? Yeah. All right, I'm back. Okay, so yes, great if you can hear us. Okay, let us know where you're from. So if you are hearing this from Singapore, okay, please help us by hitting the thumbs up button. If you are watching this from Malaysia, can you hit the love button? If you're from other parts of the country, you can type any button that you like. Let me know who is actually watching this. Great. We will be starting very, very soon. Okay. And today we actually invited a very special, not human. Okay. A very special creature. Okay. So this creature is going to come and share with us some really special insights. Okay. When it comes to investing. So I'm going to showcase, okay, I think for those of you who are watching from Telegram, you would already know who is this person that we are going to invite. So for the rest, okay, later on there will be a special guest that will be joining us tonight for our Market Watch episode 35. And for today, our key focus is going to be on the growth stock. Okay, growth stocks. So if you know what are some of the growth stocks that are in the market, can you just type in what are some of the ticker symbols of the growth stocks? What are some of the ticker symbols of all the growth stocks? So why are we talking about the growth stocks? Because even though we call them the growth stock, but they are not growing, okay, in terms of the share price. In fact, quite a number of them has fallen 50% and even in some cases 70%. Oh, so I do have friends who are holding on to it, and they say that they describe, the feeling right now as worse than the COVID. So we all know during COVID, there was a huge drop back in 2 years ago, January. Okay, yeah, exactly 2 years ago, 2019. All right, so they say that this is almost equivalent or worse than that period of time where everything dropped that much. So later on, we're gonna invite this special guest, and he will be coming up to share with us, exactly, is it a good time to buy? And of course, all these growth company, are they really at a good value to enter or not? Okay, I'm going to let the expert actually share his point of view. Yes, thank you so much, Paley, NVDA, and actually there are quite a number of other growth stock as well. Some of the more popular are, things like Palantir, companies like CrowdStrike, companies like Fastly, Roku, even DocuSign. These are all, I would say, COVID stock, or even or rather growth stocks, right? So we will be discussing that in a while. So let me bring up my slide as well. So today, okay, it's going to be short and sweet. Okay, today I've taken a look at the market. Not exactly the best day that you want to look at the market, especially for next week. But nonetheless, I'm still going to share with all of you. So welcome once again, everybody, to Market Watch episode 35, right? And of course, today we have a very special guest. So this is going to be the key sharing for tonight. I will invite our special guest to share with us his perspective of all this growth company in terms of value investing, in terms of looking at the value, looking at the fundamental, the intrinsic value of all this company, whether is it a buy or whether is it a no-go. And last but not least, we will look at the market outlook for next week. And of course, we will end off with a short Q&A as well. Right, so without further ado, for those of you who are watching this, okay, this is again disclaimer. Okay, please do your own due diligence. Without further ado, can everybody type in KAT inside the chat? Okay, so can we put our hands together to welcome Cat Vester?
Hello.
All right,
Can
thanks
you
for
hear me? If you can hear my voice, can you just type in KAT, KAT? Thank you, Paley. How about the rest? Can you hear me? Thanks, Hancock, Albert. Okay. Thanks, Baby
awesome.
Investor, for inviting me here tonight. I also don't know why he wants to invite a cat to talk about growth stocks, but I think it's because the cat have 9 lives. So probably the cat has a better chance of investing in growth stock, because you know that investing in growth stock can be quite dangerous.
Yeah,
Okay,
yeah,
without
yeah. There are a lot of people who have died from investing in growth stock. So I'm glad
but
that
it,
you're still here.
but it's okay because I got 9 lives. I'm now on my fifth life, so I'm still got 4 more. So anyway, let me just share my screen and look at some of the hot growth stocks and see what they are. Okay, let me share screen. Okay, if you can see my screen, okay, this is showing Nvidia, but I'm not going to talk about Nvidia right now. I'm going to talk about other more stocks that have come down quite a fair bit. So let's start with this one of the favorite of 2020. One favorite of 2020, Fastly. Can I know who owned Fastly? Can you just type into the chat? Fastly. F. Just type F if you own Fastly. Anybody own Fastly? So this is a very hot growth stock in 2020, not so hot in 2021, and not having a good start in 2022. But usually, right, for cat investor, I will look at growth stock for a few things. Okay, so Fastly, as we all know, is sort of like a cloud company that helps to accelerate content um, to the internet. So what happened is usually, right, it's quite hard to evaluate these type of companies because they are considered what we call a software as as a service or SaaS company. So a lot of time we look at things like gross margin. So what is the gross margin of Fastly? You can see that it's hovering roughly around 55%, around there. Not the best, but not too bad. I mean, the really good SaaS company have gross margin of 70% and above. Okay, but because Fastly includes software and hardware in their offering, so that could be one of the reasons why the gross margin is actually lower. But if you look at the earnings, right, then you can see that earnings of Fastly has not been doing well. And one of the major reason why the price has come down quite a fair bit is because if you look at the TTM, which is the trailing 12 months earnings per share, it has actually double the losses. Okay, double the losses. So that's why the stock price has probably come down roughly about 60 to 70%. Okay, but is there hope for Fastly? Okay, so I like to look at free cash flow of a company. It shows whether the company is able to stay afloat and have some cash flow. But unfortunately, free cash flow of Fastly is not that good also. So in this case, I think Fastly is not one of my favorite growth stock in that sense. But let's look at the growth of Fastly. Okay, let's look at growth of Fastly. If we can see year over year revenue growth has been hovering roughly between 30 to 40%, but the latest quarter was 22%. So growth has also come down already. So generally, I'm not too optimistic about Fastly. Although the price has come down quite a fair bit, I don't think it's really very cheap. If you look at the valuation, right? So for this type of company, we usually look at price to sales. It's currently having a price to sales of about 11.2. Not the lowest, not the lowest. Based on that, so I would say Fastly probably not undervalued at this point in time. Okay, so Eugene, I think you own Fastly. This is just the Cat Investors opinion. Okay, but a lot of time when you invest in growth stock, right, it's not the numbers that make a lot of difference. It is actually your conviction in the stock and also whether you understand the business. So if you really understand the business and you see that it has some growth potential, okay, please share with us, because frankly Cavester is not very familiar with Fastly, but generally looking at the balance sheet and stuff, it is not so optimistic about Fastly. So baby investor, should I go on to the next stop?
Yeah, maybe we can also hear from the ground, like because Fastly is actually a very popular company, you know, and I mean there are a lot of people that are talking about it, a lot of YouTubers also talk about it. So maybe do you know like why do you think this company is something that it caught people interest, you know, despite, you know, as what you mentioned, it is highly overvalued, it is losing money every single year. Why do you think people are interested?
I think a lot of time for growth stock, right, you must have a story. So Fastly probably have a very good story in 2020 at the time because it clinched a lot of big customers. So a lot of this shows its popularity and at one time is actually dominating the market. Okay, I still think that the technology is good, but it's just that at the current price and at the current valuation, it's probably not the best time to go in. Like Capvester also do a bit of technical analysis. Later, maybe investor can talk more about that. You probably will want to go in and catch a falling knife. Yeah, of course, the business may turn around, okay, but it may take some time. So, how low it can go, I don't know. But whether you will reverse right now, probably we will wait for baby investor to look at the charts for it.
Yes,
Yeah.
yes, yes. I totally agree with you. I mean, if I were to follow YouTubers based on, you know, what they share, I would probably be, you know, very interested in this company because they told me, you know, this company can grow how many times, the potential, you know, that this company is going to grow, you know, at least 100%, you know, over the next few years. So I was like so excited about it, you know. But after hearing what Cat Vester has mentioned here, seems like, you know, maybe I should take a step back. And I was looking at the chart itself. Oh yeah, literally what you mentioned, it is catching the falling knife. I mean, right now it is still going down. You know, it could go down even further more. You know, so again, if let's say this stock continue to drop, would Catvester consider going in at a certain price, or this is a company that you will not consider at all?
Mm, I think for Capvester, I will not consider because I do not understand this business very well. Like I said, if you want to invest in a growth company, you must be able to, example, explain the business in a very simple sentence. What does Fastly do? So I can't. I can only explain, oh, Fastly does some sort of cache, fast forwarding so that you load your website faster. That's all I understand about Fastly, but maybe someone can know it better than me. Yeah, but because it is not in my circle of competence, I probably would not look at this company. Yeah.
Got it. Right. So I think this is definitely very, very clear. So another company, okay, that I wanted to consult investor, and this company, right? I mean, Tesla has been a company that everybody is focused on, but this is like the second most popular company after Tesla, and this company is actually Palantir. So what is your view
Mm.
for Palantir based on, you know, the fundamental?
Baby investor, why can't you choose a company that cat can understand? Palantir, okay, Palantir. I only know that it's quite a secretive company. It has been in business for 20 over years, I heard, but only listed in 2018. But it has been doing business in the with the defense, homeland security, FBI, and stuff like that. So they probably have something. If you go back to value investing, it probably has something called a moat, and the moat is basically is in a very niche market. They are providing services to the defense industry, and what they have, the technology is probably very classified and stuff. So in that sense, even without looking at a company, there's something that Cavester like because it's something that is very hard to remove. This mode is very very strong for Palantir. But saying that, right, again, this is not in Cavester's circle of competence. But if I just look at the numbers, right, you can see that the revenue has sort of doubled in 2 years and is still growing very, very strongly. So that is a good sign. And if you look at the gross margin, right, compared to Fastly, right, it is enjoying much higher. It's in the high 70s compared to Fastly. So this is also a hardware and software company, if I'm not wrong. So they also have some proprietary hardware. So to have 77% gross margin is really quite impressive. Okay. So in terms of operating income, I think it's still negative. and stuff like that. But you have to consider the nature of the business. If you are doing business with the defense and stuff like that, your contract probably is going to be worth at least 5 to 10 years or even 15 years. And in any contract, right, if you have a long-term contract, right, your revenue recognition may be in stages. So that could be one of the reasons is that they have to pour in a lot of money to invest first before they get revenue from the customer. So that could be a reason why the operating income is negative because they are still in the early phase of the contracts. But this is something that need to be examined further. But saying that, right, if you look at the free cash flow, this is a positive sign. If you see in the TTM value, it has turned from negative to positive. So the other company which I saw done this previously, okay, was actually Tesla. Tesla in 2020, okay, they have turned from negative free cash flow to positive free cash flow. And in 2020, that time, they actually hold on. In 2020, that time they actually go 729%. Okay, I'm not saying that Palantir is going to grow 729%, but this is a good sign. Okay, a good sign. But again, let's look at valuations for Palantir. So if you look at Palantir valuation, price to sales is also on the highish side. It's about 21 times. Again, not the cheapest, but I mean, if you ask me, I think the growth story of Palantir sounds more convincing for Cavester than Fastly, in my opinion. Yep. So that's my simple analysis for Palantir. Maybe investor anything from you?
Nice, nice, nice. Yep, yep. So I was actually looking at like what you mentioned, some of the contract, right? I remember looking at one contract which they secured. It is like $50 billion contract which they have already closed. And again, this amount doesn't reflect inside the revenue. So I guess like what you mentioned, I think they have a lot of contract with some of the secretive agency, which again it could be a very strong mode because again it is not easy for any company to have access to such a secretive company. And of course, if they are collecting the money in stages, which also means that moving forward is also a little bit like SaaS company in a way, future profits are in a way already secured. So this is of course something that we have to also identify, like how much contract exactly is already secured and what is the future cash flow, potential cash flow. But I think, yeah, like what you mentioned, something that really caught my eye is that this company has turned profitable. In terms of the cash flow, it is also profitable already. It's positive, and of course, valuation wise, still on the higher side. But once the company turns profitable, I think the valuation and everything, as long as this is a growth story, valuation will be a secondary concern for us. So overall, I do see that this company is pretty exciting, and to be honest, is also inside my watch list. So I'm watching this, very, very closely as well, right? Okay, and is there any other company that Catvester is familiar with?
Familiar with, yes. I will show you one company which I am generally more familiar with. And this company is called Roku. Roku, okay. If you are familiar with this company, can you just type in a R? Okay, can you just type in a R? Okay, in the meantime, I think Luciana has the question. Are we okay to take questions, baby investor?
Yep, sure. Let's answer the
Okay.
question.
So the question is, the company is turning positive. Why is it not reflected in the stock price yet? So very, very good question, Luciana. So I will gonna quote one of my Sifu. It's called Warren Buffett. Okay. So Warren Buffett says that in the short run, the stock market is a voting machine. Okay, that means basically who is more popular will get the most vote. So a lot of this growth stock, right, was the darling last year, but this year we don't know. But in the long run, it is a weighing machine. Okay, so um, when company is turning around, it will not show immediately in the stock price because human beings will like to wait and see and stuff like that. But the thing is, in the long run, right? The price should be reflected. but then we do not know when will it be reflected. So that is the answer for that question. So Roku, anybody owns Roku or knows Roku? Not so much. Okay, so maybe let me just talk a little bit about Roku. Basically, it's a streaming device that helps to let you watch Netflix and stuff like that. But it also have a software subscription that is again a hardware and a software together. So very interesting, but very North American centric. Okay, they are very popular in the North America, but I think in Singapore, right, or in Asia, nobody hears about Roku. We all know about the China version of Roku, which is basically the streaming box where you can buy in Simlim. Okay, but somehow the streaming box from China doesn't sell that well in US, but US a lot of people are buying Roku. So if you ask me whether there is a mode to this, I would say very very subjective to the area. So like example in the maybe in Europe and maybe in America, people are more social conscious about using non-legal stuff. So that's why they want to buy a Roku subscription together with the hardware and stuff like that. So in a way, I would not say the smoke is very, very strong, but I think in North America, they're still doing very well. But if you look at the numbers of this company, right, you see the revenue has been growing tremendously. I didn't compare it to Netflix growth, but I think it could be pretty similar. It could be pretty similar, as you can see in 2020 to the TTM numbers, right? It grew by another 60 to 70%. So that's probably similar to what is Netflix growth. Okay, and you can see one impressive thing about this company is the margins are actually growing. So it's quite impressive where you can grow margins. So I think they are. This is usually the result of when they have a software subscription that works well. Okay, and you can see that they also have turned operating income positive. So again, right, the same things. You see that a lot of things from 2020 to the TTM, they have actually become positive from operating income, operating margin, net income, even earnings per share. So this is very, 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 very similar to Tesla 2 years ago. Okay, so again, will this grow 729% like Tesla in 1 year? I don't know, but the numbers does look good, and the free cash flow you can see it grow about 200 million. Okay, in the last 12 months, 200 million in the last 12 months. So this is one company which I think has quite a good potential, and the revenue growth have been steadily in the 50% region. Okay, and even in the EPS growth, well, this is only 1 year, but they have a very impressive 433% EPS growth. So when this type of companies come to my mind, right, I will pay special attention to it, and of course, I will always look at the valuation of it. So when I look at valuation, right, um, unfortunately, again, not the cheapest, 9.8 price to sales. Okay, but the good thing is because it's earning money, right? So it actually has this thing called a price to earnings. So very, very seldom, right, in high growth company, you can get price to earning because they're not making money. But for Roku, because they turn positive in terms of EPS, so it has a price to earning of 86. So the question now is, in ultimate investing, right, usually we say that price to earning, right, we want the price to earning growth of more than or less than 2. So the question to those who are in our UI community that know how to do the calculation, so can the growth actually double this? So meaning that the growth for next year need to grow at 170%. Well, last year they grew 400%, but the coming year, can they grow 170%? So if the answer is yes, it can grow 170%, then yes, this company is actually undervalued currently. Okay, but if you ask investor, even though I got 9 lives, I still got 4 left, to bet on a company to have 170% growth, I won't be that confident. I don't know about baby investor. Do you think Roku can grow 170% in the next year?
I mean, 170%, I don't think so, definitely. But you're looking at PEG too, right?
Yes.
So it should be half of 86, right? I mean, it should
Oh,
be.
yes, you are right. Yes.
Hey, so actually can buy. Woohoo.
Yeah, so actually you only need about 40,
40%, 40%.
46, yeah, 45%. You are right, you are right. Yes, this cat sleeps very early, so at about 9:30 his brain stops to function. So you are right. PEG2 means that the growth needs to be about 45%, which is I think very achievable in this case. So okay, let I think a Cavester changed his call. I think Roku is currently undervalued based on this. But again, don't go and catch a falling knife. Wait for baby investor to look at the technical analysis for this.
Nice, nice, nice. Okay, let me find the hot. Yes, yes, this is definitely a company that is also inside my watch list. All right, but later on we will take a look and see whether is it a good time to go in or not, right? So I think like Canvesta has actually shared with us quite a couple of company already, and we can actually see that some of them are relatively strong. I mean, of course, many of them have started to turn profitable. So that to me, a lot of them is maybe a lot of people is also looking at Tesla, as a reference, like how if you were to buy Tesla, the moment it turns profitable, you will be making a lot of money up to today. So maybe people are also having the same growth story where a company turn profitable, then you can make a lot of money. But I do see that, with the recent drop, even though it's pretty scary, I think it is scary for those of you who are invested into it. But right now, baby investor is not invested into it. So I'm actually quite happy. In fact, the more it dropped, the happier I get because I think I'm interested in this company, and the more it dropped, the better the price that I can actually secure them at. What do you think?
I think yes, I'm gonna may take a nibble or take a bite, but not now. I'll wait for baby investor to tell me where is the reversal, and then I'll start to nibble. As you can see, my fangs are actually quite sharp, so I can nibble quite well.
Nice, nice, nice. What about the audience? Maybe we can also hear from some of the audience. You can put inside the comments. What is your current action for some of this company? If you're holding it, what are you going to do? Are you going to hold on to it, or are you going to buy more, or are you going to start buying it if you have not entered, or you're going to wait and observe? Right. Let us know what you are actually going to do. Right. So I think maybe we can move on to the second part of the market watch, where we look at some of the market trend itself. I think a lot of people are looking forward to like, oh, so exactly for all these companies, what should I do? Can we enter or not? Let's take a look. I think some of the students over here, like Nicholas, Nibert for stock, hold on to dear life. Options waiting for reversal. Okay, that's great. Luciana, wait and see. Okay, Wee Kyong, Chi Kyong, a Palantir, small bite, holding on. Okay, and Han Hok is observed. So you can see different people have different perspective. Let me share. Okay, yeah, before that, okay, for those of you who wants to know how baby investor go into the market, how we are able to make money, whether market is it bull run, bear run, or never run, you will still be able to have strategies to profit as well. Join us. Okay, this is going to be the last run for likely January. So if you miss it, you miss it. Okay, the chance is just one time. So if you want, you can put in the calendar. Do share it with your friend as well. Okay, 11 January. So now, last week, okay, baby investors say that the overall trend is going to head up. But of course, in terms of the market, it might go a little bit sideways. So this was exactly what happened. Everything was dropping, dropping, dropping. So the only industry, last week I shared that was pretty interesting was the banking industry. Now, how many of you here have entered some of the banking stock and currently you're making money from the banking stock? If you're making money from the banking stock, can you put in bank, BANK? BANK, right? I think personally for me, I have made a bit of money from the banking stocks. I sold off my BAC at about 200 and I forgot about 260%, about 1 or 2 weeks of holding it. So pretty decent, right? And of course, some of the other company that if you look at the overall view, I think Google, Facebook, and some of the solid stocks are actually doing pretty well. They are actually doing pretty well. Yes, Paley say making money from the bank. Bonnie entered GS, okay, Goldman Sachs as well. Right, interesting. What do you think, Cat Vester? What do you think about all these big cap company like Google, Facebook, Amazon, Microsoft?
I think looking at the market, right? I mean, just now I was looking together with baby investor. He showed me some charts. It seems that like Nasdaq, which has the more high tech companies, is actually dropping, and but companies like S&P 500, the index is still holding on quite strong. So there could be a chance that investor are trying to rotate out of the high growth stocks and go into these sort of safer big caps. Like example, out of no reason, right? Apple actually grow the most in recent times, while most of the tech stocks are actually dropping. So there could be a chance that there's a rotation into the big caps like Amazon, Alphabet, Meta, Microsoft, and stuff like that. So do keep a lookout for that. Yep.
Nice, nice, nice. Yes, exactly, man. The Apple that I am always looking forward to. Finally, I can make some apple pie from it already. Okay, and yes, last week I shared about the 2022 game plan, okay, which is to accumulate, okay, and also look for opportunistic trade, and last but not least to divest. So I think for today, and also the whole purpose of this market watch is really to share with all of you more about the short-term trade. Okay, that's why we are doing this weekly update. So what I'm going to do right now is I am going to go to the chart itself. In fact, I was looking at the chart. Wow, pretty interesting. Okay, pretty intense. Okay, so before we go to the Q&A, let me just show all of you what is happening in the chart right now. So you can see, okay, the volatility in the market definitely is a lot bigger as compared to, the last 6 months, whereby we do have some dip. But if you look at the dip itself, okay, for most of the dip, it is somewhere around 3%, okay, before it starts to bounce up. But most recent times, if you look at the dip, it's like 6%, okay, 6% on the index. And just very recently, we have another like 4%. So I would say the overall market is definitely a lot more volatile in recent times. And also right now, will the S&P get supported at the EMA 50? In my opinion, is no longer that accurate anymore. Okay, as you can see previously, the EMA 50 was super predictable. But nowadays I would say because of the psychology of the investor, it's already a little bit different. Okay, people are no longer that focused on the EMA 50. So I would say that there's a possibility that next week when the market open, it could actually go down even more before bouncing back up. But overall, like I said, when we look at the monthly chart, okay, I do see that there will be more upside coming. All right, but having said that, I was also looking at the tech sector. Wow, this is something that is pretty alarming to me. Okay, and I think something relevant to the companies that we were talking about. Most of them belong to this particular sector as well. Okay, the Nasdaq. So if you look at the Nasdaq, you can see that the market, even though for S&P it was going higher and higher, but for the Nasdaq, actually the high was being resisted quite a couple of times. Right, so that to me, okay, could shows that the trend could be changing. Could it continue to go sideways? Okay, or there's also a possibility that if you look over here, there is actually a support at about 380. If you were to fall below 380, we could be looking at even more downside coming from all the tech company. So which also means that those companies that we have discussed earlier on, there could be even more downside coming. And one of the reasons why this is actually happening, we all know that this tech industry is very relevant to the interest rate. So if you look at the TLT, previously, it was actually going up, everything was perfect. Recently, the TLT price has dropped, which also means that the bond yield has gone up. So bond yield is always inverse. Okay, so when the bond yield go up, means that interest rate is getting higher. So naturally, when it comes to all the tech stock, okay, all the cost of borrowing, everything increase. So tech stocks actually comes down. So if this continue to go down further, then again, like I said, what I mentioned earlier on, the tech could actually have further downside. But having said that, okay, if let's say the TLT is fully supported over here, it started to bounce up from here onwards, then we could be looking at some, relatively strong rebound, coming from the QQQ. But would it go sideways or would it go and achieve an all-time high? This is something that I will definitely be observing. So I would say that next week market will definitely still be a little bit uncertain. Could be more downside coming, but if we able to catch the Nasdaq correctly, I think there are quite a good opportunity, okay, some short-term trade and some profit, for us to make. So what do you think, Investor? Do you agree with the analysis so far?
Yes, I think you are spot on. And so even though I got 4 lives left, I probably won't back on the Nasdaq stocks, and I will still rotate out into the big caps where the S&P seems to be holding on quite well.
Yes. That's true. That's true. And let's take a look at some of the company that we were discussing. So it's like, wow, Palantir. It is now at, it is actually even lower. Okay, even lower than the previous support at about $18. So we could be looking at even more downside. I think, this was the IPO price. Could it go all the way to the IPO price? Wow, that would be really, really exciting. Okay, and of course, Roku. Okay, Roku, one of the company that we were looking at. You know, looking at the trend, it is definitely still going down. Looking at all the trend line, the downtrend is actually very, very strong. So never go against the trend. I think this is something that my mentor actually taught me. Never go against the trend. Always spot for reversal, and it's okay to be late than to be sorry. So again, being late is an insurance to your portfolio. So I hope this is some interesting insights to all of you. Last but not least, let's take a look at Fastly as well. We can actually see that same thing for Fastly. The trend is actually still going down. We are almost going back to the pre-COVID pricing, at about 34. In fact, it is at almost at the pre-COVID pricing. So really, really interesting. What happened over the last 2 years? The price went up tremendously, and then it just came down. I think I'm not sure. But what do you think, investor? Do you think that if the price were to go back to the previous pre-COVID price, do you think that there could be an opportunity to enter? Because like what you mentioned, okay, all these companies actually, even after COVID, they will continue to grow.
Sorry, you were asking me a question?
Yes. Like, what do you think if, let's say, the price of all this company goes back to pre-COVID, at about $20, would you start to take a look at it?
I think the thing about this is you have to look at your overall portfolio, how much capital you have or how much bullet you have. Like you shouldn't use up all your cash. So like I said, I'll nibble at a selected point. So example for Fastly, if it goes back to pre-COVID area of about like the $12-13, yes, I will probably take a nibble because I think this company in the long run is still doing well and they are still the market leader unless something very drastically changed to the technology and stuff like that. So similarly to Palantir, I think it has a strong moat. So I think this would be something that we'll look at. But example like Roku, we are talking about Roku just now, and what happened was although even though the price shows that in terms of the PEG it is undervalued, but if you look at the trend of it, right, it's just gonna, if you go in now, you're just trying to catch a falling knife. So why not wait for the reversal and then ride the trend up? So that would be what a smarter investor would do when they combine fundamental analysis and also technical analysis. I mean, Canvester used to be just looking at fundamental analysis. Okay, but I learned losing 5 lives previously that if you keep doing that, right, you will start losing all your lives. So just look for the reversal and then ride the trend up. I think that is the new way to do investing. Yep.
Wow, that is fantastic. That is fantastic. Yes. And I personally do agree that I think in the short run, okay, it is definitely a lot more challenging. So if you want to actually be able to make money from the short run and the mid run, I think in terms of skill set, definitely you need to learn how to equip yourself with not just fundamental, definitely combined with technical and also the right option strategy to use during the right timing as well. And of course, if you're looking at long term, then I would say that, just simply buy and hold. And of course, at the same time, even though we are telling people, just buy and hold, having the conviction, okay, having the confidence to ride the 70% drop, like what happened to Roku, even though it is buying stock, but it's definitely not easy, I would say. Imagine you put in $100,000 and now $100,000 is like $40,000. It's pretty crazy, lah. Okay, to be able to ride this wave down. So yeah, I think this is basically our insight of the growth sector itself. I think there are definitely some opportunities, okay, especially like Roku as well as Palantir. But with regards to the timing, we don't think that this is the perfect timing for us to enter. We will continue to monitor and definitely to look for a good opportunity to enter as well. So now let's take a few questions from the ground. If you have any questions, do type it in. If not, then we will actually call it a day. I think Cat Vesper needs to go to sleep soon. Yeah, it's definitely late. As you can see, it's already very, very dark over at Cat Vesper. So we have a question here. Is Microsoft a good time to enter? Let's take a look. All right, so I think we always have to ask ourselves one and two questions. Number one, are you looking at this on a long-term perspective? Okay, if you're looking at a long-term perspective, I would say that, okay, in terms of the valuation, I think most of the big cap are reasonably priced. All right, reasonably priced. Again, it might be there to hedge against inflation. If you're looking at short-term trade, personally, I don't see any entry as of yet. If you look at the price action, there's no entry. So I would definitely wait. Next one, let's take a look at TSM. Wow. I knew it. I knew this is coming. All right, so TSM, I was so excited. In fact, I went in on this particular candle. No, sorry, I went in on the second candle. Yeah, so you know that right now I'm losing money. So again, not every stock I go in, I make money. Okay, there are stocks that I go in and I'm losing money. So TSM is one of them. So right now what I'm looking for is whether, okay, it will actually bounce back up from here before going higher, or okay, this is a green, this should be green color, or it could actually comes back down. So there's actually two directions. So if let's say on Monday TSM continue downwards, maybe I might just cut loss and take whatever amount that's left. If it does goes up, I will continue to hold on to it. So this is my strategy. Is it a good time? I don't think so. Right now it's like 50-50. It could bounce up, it could also goes down. Why oil stock so bullish? Maybe this one we can check with Cat Vester. What do you think? Why do you think oil stock are so bullish?
I don't know. I only take fish oil. But anyway, I think the oil price has been going up for some reason. It has started to reach $80, I think. So the thing about oil stock is what we call a cyclical sector. So as oil prices go up, the stocks tend to do well, and when oil price go down, the stocks tend to do not so well. So for me, it's not something that you can catch the timing so easily, because it's always influenced by the prices of oil, and we know that prices of oil depends on a lot of factors like supply and demand, which can be man-made. Example, the OPEC can limit the supply or increase the supply. So it's not such a easy sector to trade based on fundamental. But if you look at technical of it, right, probably that will be an easier way to catch the cyclical trends for oil stocks. Yep.
Nice. Yes, I totally agree. I think oil stocks is a little bit harder because there are so many, like news, regulation, politics, all this can affect oil. And at current price point, we all know that green energy is definitely is already here. Everybody is moving towards electric. So that could also be a reason, because there's a lot of transition into all this battery. At this current point of time, there is a surge in oil demand. And of course the supply has always been short, so that created a spike. But in the long run, I think oil company, they know that they are pretty much screwed. They are also moving towards electric and also green energy as well. So overall, in the long run, like I said, this is definitely, I do see that overall in the long run, this is going to be a downtrend. It's going to go down, down, down. So this could be something like this. It goes up before going down even further. And then the last thing, that there's no such thing as oil anymore. So yeah, I think this is, again, these are all our personal view. Yeah, maybe we take fish oil lah. Fish oil will still be there. Okay, next is crowd good to enter. Let's take a look at CRWD. Okay, nope, definitely you can see that it is obvious downtrend. So never catch the falling knife. Next question, is Apple a good pricing? Okay, again, like I say, it depends on how you are looking at it. If you're looking at very, very long term, even if you're looking at long term, I will not enter at current point. Maybe I'll wait for it to pull back to about 160, or even if it goes to 155, even better. Even if you're looking at short term, I don't think there's anything we need to do as well. There's no obvious signal as well. So yeah, Apple, nothing to go in. What about SE? Oh, very, very popular stock nowadays. Okay, because it dropped a lot. SE. Wow, let's take a look. This is pretty painful, I think, for many people. 48% within a short period of time. Same thing. If you look at the trend, it is obvious downtrend. So wait for it. Okay, wait for it to reverse before we enter, or before you want to start buying share options, any other strategy. I think it is definitely a good time for us to wait. Okay, last but not least, this is going to be the last question. Okay, baby Bowen, if I have options for TSM until September, if the price goes down, is it good to cut? Yes, as mentioned, TSM, if it were to go down on Monday, cut it away. I will cut it away. If it were to go up, then I will continue to hold on to it. Okay, so this is what we have. Okay, once again, can everybody just type in thank you, Cat, TY space KAT. Okay, can we say thank you, Cat, for actually joining us today for this sharing session. Okay, I think it has definitely been a very valuable insights, okay, to all of us. So before we all go off, okay, one final announcement, okay, and publicity. This is the last webinar for January. Do sign up if you have not done so, or invite your friends to join us, in terms of how you can benefit from the market, using options, technical analysis, as well as fundamental analysis. I will be sharing more during this session. If not, thank you so much, Kat, once again, and thanks everyone for joining us tonight. With that, thanks everyone. Have a wonderful week ahead. And most importantly, I will still see you guys next coming Sunday on the 16th of January, okay, for Market Watch episode 36. With that, thanks everyone. Take care and stay safe. Bye-bye.
Bye bye.